The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 13th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to call in. Would love to hear from you. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading off 78 points, trading at 18,065. S&P is down about 10 points, trading at 21.29. NASDAQ Composite off 32. 52.07 is the number it's printing. Russell 2000 down 11 points, trading at 12.16. Gold's up $4. Silver's flat at 17.47. Light sweet crude up 14 pennies. Leading the charge here. My screen looks like I need to reset it after this next breakout here. So we won't talk much about the individual equities at this stage. We really don't need to during the next 6 minutes anyway. So let's take a look at what the markets are communicating to you and I. So at this stage here, we've seen a nice bounce. And the bounce should be expected, should be anticipated. Why? Well, if we just simply, you know the patterns that you know the answer to that better than I do, right? I mean, you are the one that trades these patterns. You pay attention, you focus, and you know, because time and time again when they show up on your screen, you know what the next move is, don't you? Yeah, absolutely. We can start anywhere. Really, we could start just basically about anywhere that we want to. Let's start with the strong dog out here. Let's just start with the NQ. Let's take a look at a 30-minute time frame chart out here. We know that on this NQ chart, when it was making its high back at 11 o'clock in the morning on October the 10th out here, gets that seventh wave move, actually tries to extend itself by moving higher with less relative energy. It was unable to do that. That is what has cemented the top thus far. Market moves down yesterday, moves down into about the 2:30 time frame. Doing so, was that yesterday? No, it was on the 11th. I take that back. That was on October 11th. Moving lower, doing less relative energy, gets to wave number 7 again. There you got the little letter G out there. Goes ahead and bounces. Now, that was a signal to you and I that this market, because it was really not much of a bounce, right? Only got up, it's probably about a 0.382 retracement or so, and then moved down swiftly. Again, moved down swiftly into this morning. And this morning here, as we take a look at price moving lower, this is 10:30 this morning. You've got price moving lower, doing it with what? Less relative energy. Getting to which leg count on the way down? 7. Getting to a TD combo count of 13. That's the red 13 that's on my screen out here. If ever there was like an entire set of indicators, all of which, by the way, I'm teaching either at the workshop a week from yesterday, or they're included in the package, which is the other 4 workshops that you get by signing up for my newsletter service out here, you would know that this was couldn't be like Paul Revere riding through the streets out here saying a bounce is coming, a bounce is coming. Now the question is it a bounce or is it a bottom? At this stage here, what you and I know is it is a bounce at this stage. The question is going to be bounce to where? Well, the 30-minute chart out here if we just try to, I hate to, well, I'll do it anyways. If we take a look at its move out here, only in its first leg to the upside, price is trading above its oscillator on change line 47.75. So that says, hey, let's go check in on the 120-minute time frame chart out here. Let's go see what patterns are out here on this larger time frame. And wouldn't you know it? I mean, truly, wouldn't you know it? It also gets to wave number 7. So now you got Stevie Wonder singing all over these charts out here. You get to the key of G. You do that this morning. The 2-hour chart pushing its rubber band lower with less relative energy. Boom, the slingshot. Now, as long as price on this 120-minute chart is able to stay above 47.7956, not to be exact, but to be exact, 47.7956, says you've got higher to go. To where? I would say at least to the bottom of its TAS profile, it's 48.0288 to 48.0865. That would be the range where I would anticipate that the NQ ought to be able to bounce to. You get back below 47.7952, the message is the move lower will resume. At least that's the message to me at this moment. We take a look at a 5-hour time frame chart out here. In this case, not really giving us any signals here to go on. So other than its oscillator and change line saying 48.03 could be the number, which is also the bottom of its box out here on the 5-hour chart. So that seems like a very feasible number with regard to where that bounce could take us to. So you're at 47.90 basically. You're up about another 20 points or so to the upside inside of the NQ, which would bring the NASDAQ, just down about 15 points or so. So that's what I would be looking for. Now, a couple of questions that have already come in with regard to candles that are forming. One in the den, 2 emails, and the listener, the reader, certainly, identified that we've got several of the indices forming hammer candles. Let's take a look at the Dow. Now, in a hammer candle is a beautiful candle session, especially when the market is trying to hammer out a bottom. Now, they typically will hold as support, typically. But if we take a look at the Dow out here, you'd have to say not so fast here. Just look at this chart here since May, and we've seen basically each of the hammer candles that have formed out here fail. Now, I don't know if today is going to end up being a hammer candle or not out here, but just because that's what we see, I would say, hey, not so fast. However, the one thing that I would say is why we want to be careful with regard to not so fast, Mr. Corso, is the following. And that is, if we do a countdown from the high out here, that high, by the way, took place on the trading session of, when was that? August the 15th. We're forming a hammer candle at a 7th wave move. The key of G out here. And that says, son of a gun, where could price bounce to? Well, let's go put my oscillator on change line up on the chart out here. Let's go do that as we decorate the chart. That says 18,181 is really not out of the question should this bounce continue. Longer term, where's the trend? Nothing has changed. Nothing has changed. Not yet. When it does, I'll let you know. And with nothing changes, says the markets continue to move lower into November, courtesy of the election cycle. Steve Rhodes, TFNN. We'll be right back, folks. My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currency, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now that I refresh my screens out here, leading the charge here to the upside, Alta Salon, trade up $25, about 11% out at 264.61. Lindsay Corp up 12%, $8. You've got HCA Holdings up about $3. Universal Health Services up $2. Alaska Air up a couple of bucks. The downside, Mercado Libre leading the charge, $14 and change to the downside. Google's off $9. Chipotle's down $8. Priceline off $8. Amazon down 7. Marriott Vacations down $5. So we've got plenty that we can go ahead and take a look at. Just trying to get this thing set up. There we go. Okay. But what do we want to take a look at? Oh, by the way, there was a question that came in and said, hey, do those patterns that I show you guys each and every day, do they work on all instruments? And the answer is they do. Which is why taking the signing up for the newsletter service and all the workshops that I do, no matter what it is you trade, no matter what time frames it is that you trade, you're going to be able to utilize these. I would show you the 10-minute chart. I can't show you the 10-minute chart. But here's a give you an example, right? Here is a 30-minute chart for the Great British Pound U.S. dollar. So for those of you that are Forex traders out here, and this has been working beautifully as well, we can see that from this swing point out here at about 23:30 in the evening, this is 23:30, this looks like on October the 11th, from that high that it formed, down to a low that came in here at 3:30 this morning. You count the waves on the way down. You get to seventh wave. You get to letter G. What occurs? Price moves higher. You got to love it. So it doesn't matter whether it's a time frame that you're trading, whether it's a forex, a currency chart that you're trading, or a commodity, or an equity, or an index equity futures contract. I mean, whatever it is, they work on all time frames, and you just want to be aware of the signals out there that go ahead and give you the probability that some type of turn is about. And what's nice about having those as your pilot or as your co-pilot is eventually you build up enough trust where you go ahead and you take the trade. You try to talk yourself into, I can't really work this time, can it? But the reality is, well, why can't it? It typically does. So you want to be paying attention to those things out there. Now, one of the things that there's been some emails going back and forth, myself and listeners out here. There's some discussion yesterday, or I threw out some discussion points inside the Tiger's Den, specifically with regard to interest rates. Everybody is afraid, not everybody. If you take a look at the general consensus of the media, the boob tube, that higher interest rates, and that the reason that the Federal Reserve is not raising interest rates is because they don't want to crash the markets. They don't want to crash the parties. Is that your belief as well? One of the coolest things I will tell you about technical analysis is that you can say BS before Steve to all of the noise that's out there. Simply go take a look at charts for yourself. Go take a look at historical patterns that are out there and answer the questions, because I promise you, well, you tell me, I can't promise you anything, right? What do you think is the likelihood that the people that are on the media, let's say the financial media, that a significant number of them are just reading something that somebody else has put in? And what do you think the chances are what somebody would typed into the teleprompter was just reading it from somebody else's stuff? That is how, talk about just absolute, talk about rip your face off insanity. I mean, that is just simply it. So here's what I do. Was it Joe Gannon or was it Friday that said just the facts? I think it was Gannon. Wasn't it Gannon that was just the facts? It doesn't really matter. Here's what we want to go ahead and take a look at. Just the facts. I don't care who it is that said it, but there we go. So here is, which is this? Oh, this one's the U.S. dollar index. Well, okay. Let's in fact, as long as we're here, let's just go ahead and do this, because there are people. Now, this is a monthly chart. Here's what I want to do. I want you to be able to take in the larger time frame to understand. I'm not really interested in a day's move or a 2 days move out there, because if I can give you the larger overview, then you're going to make a determination whether you should sell rallies or buy dips. That's what I want you to do, because if you can get that clarity in your head, then you'll be able to understand where the opportunities lie. Now, many people believe, and potentially rightfully so, it just really depends on what's going on with regard to the other currencies like the Great British Pound and the Euro and the Japanese Yen and the Loonie, Canadian dollar, and the Swiss franc and the Swedish krona, because those are the ones that make up the U.S. dollar index. It's not like the U.S. dollar index is just one component out here. You've got to take into consideration all of those. Right. So if the U.S. is raising rates, and so is Great Britain, so is the Euro area. I mean, you got to put everything. And then sometimes it doesn't even matter what the central banks are doing. The markets are going to do their own thing out here. But here's what we do know. And take and look. And so therefore, the belief is that, hey, if we raise interest rates, where the dollar index is going to go up. Now, let's just take a look at the correlation between the S&P 500 and the U.S. dollar. Again, we're taking a look at, this is a longer-term chart. Here's a monthly chart out here. And just take a look at where the S&P bottomed back in 1994. By the way, it was 1995 that the U.S. dollar index had bottom on this chart that we're looking at. You draw the arrows. No, I'll go ahead and draw the arrows. And then you tell me, let's just make these green arrows, if I can find a green arrow there. Here is what we're talking about, right? You tell me the S&P 500 did what? Went higher. No big shakes out here. U.S. dollar index did what? moved higher, moved substantially higher. And so now let's come back out here to where the U.S. dollar index really made a double bottom. Again, we're using a line chart out here. It bottomed back in 2008, right in the March timeframe, 2008. Double bottomed out here in April 2011. Take a look what the U.S. dollar index has been doing folks, the U.S. dollar index has been going up since April of 2011. Again, just taking a look at this on a monthly basis out here, right? The U.S. dollar index going up, you're really going to tell me that the S&P 500, that's what I'm using as a gauge here, is going to start crashing to the downside? The answer is it's not even in the cards out here. It just doesn't exist. It is not in the data. It is not in the data. It is just not in it. Okay, so let's just so we're started there. Now, on a daily basis and stuff like that, yeah, you're gonna. But wouldn't you want to use that as your advantage? Wouldn't you want to use that as an advantage from a daily perspective, knowing the longer term time frame, and therefore you would look to other patterns, those types of patterns that you and I trade out here. So the best thing for the bulls out here, the absolute best thing for the bulls, and that's I'm speaking to, how about the opportunists? Because this is a game about being able to make money. And so now you don't want to change. We don't want to tell this story to the rest of the media, okay? This has got to be kept secret. Don't tell anybody. This must be kept secret to you and I. Why? Because if this starts to get out, then we won't be able to take advantage. We want people believing, and we want people taking action. We want the Fed raising interest rates. We want to see that market start trading lower, and then for us to look for those patterns where we are Johnny on the spot, whatever that means. We're going to go ahead and take advantage of that and make a few dollars, put a few dollars in our pockets. Should we not? Now let's go take a look at interest rates rising, and the markets. We're not going to see a different picture, but let's go look at them anyways. Short term, long term, whatever you'd like. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. NASDAQ's up about 33 points right now. Now, the chart that we've got, and here what you and I are doing is basically putting fallacies. We're putting myth. We're trying to look at fact versus fiction out here. In that way, I can do the best job I can to prepare you for the realities of what the market ought to do. And as one of our dinners put in here, intermarket correlations come and they go. They do. Here's an intermarket correlation that has come and has stayed. And what we're taking a look at, the bottom portion of this chart out here is the 13-week Treasury yield, which one in taking a look at this chart here could argue, geez, there's actually nothing better to tell us what's going to occur in the stock market as short-term rates start to rise out here. Take a look at this. If we go back just simply to the 2000 time frame, okay, the 2000 top. This is the S&P 500 that we've gotten. Let me go ahead and get the arrows going here. I'm not going to worry about the color of the arrow. I'll go ahead and use green since just did this. Here, the S&P 500 from the 2000 top moves lower. What do short-term Treasury yields do? Move down. Then we start seeing the market form its bottom back 2003 timeframe, 2002 timeframe. Treasury yields are doing what? Moving higher. What was the S&P 500 doing? Moving higher. Then we get to the 2007 top. Market starts moving lower. What happens to short-term Treasury yields? They are moving lower as well. Now what we've got is short-term Treasury yields have basically done diddly squat, right, since 2009. But just take it. This is, someone might say this is not a lot of data points. My goodness, really? If we go back to the year 2000 and we're in 2016, how many gosh darn data points do you possibly need? I'm giving you the big picture so that you understand the big picture. So therefore, if the market moves up when short-term rates go up and the market moves down when short-term rates go down, and then when you can't go down any further, the market is able to just simply go up. What do we think is going to happen when short-term rates go up? The market is going to topple. Isn't that in essence what you would believe? Much of the media would actually have you believing that? And why do you think some of these folks out here are actually pushing that story? Many of the folks out here that are pushing that story are opportunists just like you and I, right? And they just, the more people that we can get to believe that BS out there, the better that you and I are going to be able to buy something on sale, are we not? And this is being pushed by a lot of basically long-only type of funds out there, if you know what I mean. Which story is it that you would go ahead and push in the market? Look, I am not telling you a story. All we're doing, you and I, are just simply looking at what happens with the stock market versus what happens with regard to rates. And look, we can do the same thing out here. We can do it all day long. This is the 5-year Treasury yield, which in this case here, you know, we know is just simply been in this downtrend channel out here. That's clear. But look at its correlation with regard to, that's the bottom portion of my chart out here, moving higher as long, and the market's moving higher, and the whole thing. I mean, it is, but I will say, no question, there is a correct intermarket correlations can come and they can go. They can, so I cannot predict the future out here, but I can tell you what I'm preparing for. I'll just simply go ahead and say, because until I see these patterns absolutely fail out here, it is a no-brainer. Now, the real question here is, and I haven't really been able to answer it, I'm not referring to this chart here, but is what is it? Because it's not a market issue, okay? It is absolutely not a market issue with regard to why the Fed is not raising rates out here. It's not their balance sheet that is the issue. They could unload their balance sheet, their debt is really what we should say on their balance sheet, as easy as pie. Right? You've got higher interest rates versus European. Whose debt do you want to hold? Right? So they could easily be doing that. But the question is, hey, Well, why aren't they doing it? And hey, the other reason, hey, inflation, right? They've got the inflation target out there. What is inflation, good or bad? We've covered this before. I won't do it too much time, but here is the inflation. This is the purported inflation from the Bureau of Labor Statistics. So I'm not talking about your pocketbook inflation. I'm talking about the reported inflation. That way, at least I can use it. And this is runs about 2 months behind. I think this is August with regard to the inflation rate here, which is ticked up. By the way, we're in a rising price channel, as you can see, with regard to inflation. Does that bode well for the U.S. stock market? And the answer is absolutely, of course. It is. I mean, that's certainly what this stock chart tells you out here. So the good news is that you've got us here at TFNN to help cut through all of the malarkey that gets printed out there, and mostly for the opportunity to figure out how it is that you can benefit from it. So this would be a good thing. I mean, as far as I'm concerned, man, start raising those rates out there. My preference would be to start it. Here's the interesting thing, right? So you and I know, right, because I've let you in on the other secret with regard to what the market is doing and why, right? We already know who's going to win the election, regardless of bonehead stuff that each of these guys do, and parties, by the way, right? So, but we already know who is going to win the election based on the stock chart. We know what the stock charts are telling us with regard to who's going to win the election, right? And that being said, we should see a market that moves down into the middle of November, right? So I've let you in on that so that you're not saying today, you're not wiping your hands saying, hey, Steve has always taught us that right around October 13th. By the way, it's always around October 13th, by the way, which is kind of interesting, is it not? Right? To start looking for your Santa Claus rally to begin, right? Major bottom. Go back year after year. When do they occur? End of September, typically middle of October. I believe if I pull out my chart here, and this is no lie, we're going to see that the date, believe it or not, is October 13th with regard to the annual seasonal cycle. I say that's not likely to be the tide that is in place out here, right? Instead, it seems to me to be more of the cycle with regard to the presidential campaign cycle. And then they're supposed to start raising interest rates, maybe at the November meeting, right? Maybe at the November meeting. God, wouldn't that be a beauty? Knowing that we're anticipating a bottom, seeing that the market will just simply go ahead and maybe do another quick little sell-off. Boy, would that be like a perfect storm for you and I to just totally load up the gunpowder and be ready for the long position? I don't know that it's going to do it or so, but you and I are going to be able to take advantage of the cycle that is in place out here. So would it surprise me to see the market bounce today through the middle of next week? No, absolutely not. Not with the G's in place in the Dow, which has been the weak link. And we'll continue to pay attention to the Dow. But look, let's face it, the Dow itself has been forming all of these other G patterns out here, price relative strength divergent patterns. There's the 30-minute chart for the Dow. So, here is the 2-hour chart for the Dow. Same kind of pattern out here. Here is the 5-hour chart for the Dow equity futures contract. What's it doing out here? What is the 5-hour chart? Letter G. Now this says, I probably shouldn't say too often out here, but 18,017 is probably where the Dow equity futures will bounce to. So if the market doesn't end poorly today, there's no sell-off going into the close, you should expect to see the Dow futures get up into the 18,016 type level. And then people will think it's all over. That's probably where the next selling begins to unfold. But we just need to see what pattern it is that is playing out there. So longer-term view, higher interest rates is going to bode well for the market, just as higher inflation is going to bode well. And 2450, that is what is in store for us inside the S&P 500. It may get here sooner than later. So keep pulling back. We want this to keep pulling back. Let's get lower. Let's get below this 2128, folks. The lower, the better. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Back up, folks. A number of email questions here about Nugget, GDX, GDXJ. I mean, the whole kit and caboodle. So let's just do one of them as it'll, in essence, apply to all. I don't think we did Nugget yesterday, so let's go ahead and choose NUGT. This is the three-time Direction bull of the gold mining ETF. And so as we take a look at it, we know it didn't complete an A to B equals CD to the downside. That would take it down to about $6.41. Well, we do know that it is doing today, or what it has done today, it's gotten above that all-important support level. Now, the reason why this is important is because the bottom of the box and the center of the box with regard to our market profile, with regard to our TAS market profile, are one and the same, 1216. You're at 1250 right now. So staying above 1216 would be, and that's the first time we have seen this in a period since this box formed out here, that would be a beautiful thing. Now, a beautiful thing inside of NUGT offers the hope that price is going to make its way up to 1404. So that would really be the anticipated next move. After that, you're then going to go ahead and target the gap area. The gap area is going to be about 1606 to the low of 1718. And then from there, you're looking at about 1901. So that is the message inside of, in essence, GDX. Now, those aren't the number for the GDX, but inside the Nugget, inside the GDX, and so forth. We haven't really seen much in the way of movement with regard to gold or silver. Silver has given us the best bottoming signal out here at this stage. It completed an A to B equals CD to the downside. Gave us a nice little bullish reversal signal, but it's just been trading sideways. And as long as silver's able to stay above 1738, this pattern will remain in effect out here. In the case of Goldilocks, up $4 right now at 1258. The only positive that we can find out here is really going to be the mere fact that we've got small-bodied candles now at the bottom here, and prices trading above its TAS market profile. So as long as gold stays above 1252, things should be okay. Let's go out to Chicago and speak with Robert. Robert, thanks for calling. Thanks for holding. How's your Thursday going?
Oh, it's beautiful in Chicago. Yeah, we got a beautiful sunshiny day, and it's a little chilly. It's around 55 or 56, but yeah.
What was this a warmer summer for you guys, or about the same? Would you say?
Oh, it was very warm. Matter of fact, the Lake Michigan down was it got pretty darn close to 80 degrees.
Wow.
Yeah, the water was beautiful and was a warm, great golfing season. Yeah.
Oh, good. Well, hey, it still goes on, it sounds like, so that's a good thing.
Yeah, we're going to be in the 70s, I think, the weekend. So 70 plus. So that's good for whatever, October, 15th? Yeah.
Yeah, that's really cool. Cool. Now, you called to take a look at Procter & Gamble. PG, folks, is the ticker symbol. Are you in this equity? How can I help you?
Yeah, so I called a time ago, and I'm going to generalize on these numbers here. Thought that if it got above 83.80, we'd probably see 96, and that was a while back. I'm not sure. I'm going back maybe 2 months,
That's okay.
3 months ago.
Yep.
Okay,
it was. You were right. It was actually 83.87.
Okay, great. And then I'm curious. In light of the fact that we're going to have a pullback here, or in light of whatever, do you still have conviction that this might go towards 96?
If we take a look, let's look at some of the price behavior, some of the volume behavior on a daily chart for Procter & Gamble. And so not at its most recent high, but the high on September 30th was a butte because it was wide price spread with accelerated volume. The volume there was 123 million shares. Now, granted, that has been tested, and it was just a few days ago on October 10th with lighter volume, 15 million shares. So that, Robert, says you've tested a swing point on lighter volume. You failed by closing below it, and that failure says, okay, you can't bust it up anymore. Now you're going to go ahead and try to bust it to the downside. To the downside, really, is about 85.23. And where I go with that, and I don't know if it will get down there, but that's what I would be taking a look at as the extent of its decline, would be the weekly market profile. We're back inside a daily. It ought to find support around 86.56, but if it doesn't, 85.23, which is not that much lower, on an $85 stock, that's what it's looking like. I'm just looking at another. What other questions do you have? And I'm going to do something else on another screen just to see if I see anything, which I don't, by the way, just yet.
Okay, so the 123 million, that probably the price tag on that was probably 90.22, and then the
Correct.
15 million was.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Sorry about the technical difficulties that we are having out there, but wanted to go ahead and try to wrap up the show for you here during the next 4 minutes, what to look for. It's about 1:54, and right now we can almost call this turnaround Thursday. The Dow is down about 58 points. The S&P is off about 7. NASDAQ Composite is off about 27 points out here. Here's what I'll be looking for, so I can post a chart now. Okay, I'll go ahead and do this. Sorry, folks, kind of multitasking here, trying to get things up and going. So here's what we're going to go ahead and pay attention to. When we began the show, we took a look at all the patterns that you and I like to utilize in order to be able to call the market, right? And we take a look at those 7th wave moves. We take a look at price moving higher or lower. We take a look at A to B equals CD patterns. So we and those patterns were prevalent all over the place. I mean, all over the place. At 7 or 8 o'clock this morning when I sent out my newsletter, I made subscribers aware that, boy, these patterns were sort of just about everywhere. Then it broke out in like a flu. It became even more prevalent on longer-term time frame charts and so forth. So what does that mean? It means at this stage, well, it could mean one of two things. It could be a bottom. I don't think so. But it could be one heck of a rally as well. So the first level that's really going to be tested, that's the next area of resistance, could be or should be on the ES Mini, should be about the 2127 area. And we're at 2127 right now, so it's really 2127.50. We get above that, you're looking at 2134 to 2138 would be the number where you could see the ES Mini move to. Where would we see moves above that? I don't know. We'll just start with the 2140, perhaps. Could be the extent of that move out there. So, we'll take a look at that. But in essence, the market is really, in a phenomenal way, doing what it's supposed to be doing during an election cycle when there is a Democratic president in office, and it's going to move over to a Democrat retaining the office of the presidency. And that is the tide. That is the underlying cycle that is in play as we speak right now. So this says that this bounce could actually last Friday, Sunday night, Monday, Tuesday, Wednesday. So, we'll just take this one step at a time. We'll continue to look for those patterns where price moves higher and lower, wave Gs, all those types of things out there. With regard to anything else I'm looking at, summation indexes, VIX index, everything out here, still suggesting that we have further to go to the downside. And that is the bottom that we're going to want you to go ahead and purchase out there. So I hope that, today's show has been helpful to you, at least with regard to understanding a strong U.S. dollar index versus the S&P 500, and how since basically I think we went back to like 1990, and how the market has behaved. We looked at long-term charts out there so that I could give you the longer-term picture, and that way you can take advantage of what in the short term the markets will do out there. So we're not going to be afraid about interest rates rising because the stock market goes up in an environment where interest rates rise. We're not going to worry about a strong U.S. dollar index because the market behaves well with a strong U.S. dollar. Life is good. Life is very good. Maybe once we get through this election cycle. And by the way, when it moves from one Democrat to the next and the market has sold off as we get towards that November time period, you're going to see an opportunity to make money larger than you did off of the February lows. So, folks, stay tuned. Our man David White will be up next. Have a terrific Thursday. We'll see you on fantastic Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.